Hey everyone, thanks for tuning in. AT&T and Verizon stock are offering passive income investors dividend yields of around 7%. Additionally, AT&T and Verizon stock are trading at forward price to earnings ratio of less than 10. So this combination of a robust dividend yield and cheap valuation has a lot of investors attracted to AT&T and Verizon stock. The question I get asked a lot is which one is a better buy, AT&T or Verizon? So that's what I'm going to answer in this video, comparing the two stocks on critically important financial metrics and answering which one I think is the better dividend stock to buy for 2024.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
I mentioned already that AT&T and Verizon are offering investors a dividend yield of around 7%. To be more precise, Verizon offers investors a 7.03% dividend yield and AT&T offers investors a 6.73% dividend yield. So Verizon offers a slightly better dividend yield compared to AT&T. But if you're looking at these two stocks, the dividend yield should not be the only thing you're comparing the two on. That's why I have several metrics I'm going to compare these two to make a decision. The next thing I wanted to compare these two on is their trailing 12-month revenue. And this is kind of difficult to do because they've had several acquisitions and divestitures between them. And so the revenue is not really focused organically on their core business. Still, this gives an insight into what's been happening with AT&T and Verizon and their recent scale. So Verizon at 134 billion is now the higher revenue generator between the two after AT&T has divested away of some big businesses, including the DirecTV segment. AT&T now generated 121 billion in revenue in its trailing 12 months. Now, longer term, investors should not expect AT&T or Verizon to grow revenue quickly. Double-digit revenue growth is almost out of the picture for AT&T and Verizon. In fact, if AT&T and Verizon were to grow their revenue in the mid-single digits, like 4% or 5% even, that would be really strong revenue growth for these two companies. They operate in a mature market. The people that they sell their products and services to pretty much already have the products and services, right? So they're not accessing new customers, they're just serving existing customers, trying to add incremental services to those customers and increase prices to generate revenue growth. That's their growth prospects, right? Everyone who wants a wireless cell phone plan probably already has one. Every year, there's a small number of people that age up into the group, and there's a small number of people that age out. And so the market is mature, and the only area for growth is price increase. And if a individual wants to add, let's say, a tablet plan in addition to a cell phone plan to their service, that's the area, that's the opportunity for growth. So let's look at the next couple of years for each. So for AT&T, the consensus estimate is that it will grow revenue at 1.2% in 2024 and 1.1% in 2025, with earnings per share growth of 1.8% in 2024 and 0.9% in 2025. Additionally, analysts expect AT&T to add 2.9% EBITDA growth and 1.9% EBITDA growth in 2024 and 2025, respectively. EBITDA is informative for AT&T because a large bulk of its expense is depreciation expense. And so EBITDA excludes that and gives you an idea of its costs. Although longer term, the company does need to reinvest into the business aggressively. With each new generation, there is a new technology, the current one, the 5G technology that AT&T has to invest in. So with every cycle, it needs a massive investment to get itself up to the latest technology. Similarly, Verizon is expected to grow at just 1.5% in 2024 and 1.2% in 2025, with an earnings per share decline of 1.9% in 2024 and 1.9% increase in 2025, with EBITDA growth expected to come in at 2% in 2024 and 1.9% in 2025. So they are equally modest in their growth expectations for 2024 and 2025, with AT&T slightly better in terms of EPS and EBITDA growth over the next 2 years. Looking longer term at their ability to generate cash flow is one of the reasons why I like AT&T and Verizon stock. They have a sticky business. I mentioned already that they're not growing very quickly and it's a mature business. That's the downside of the business. The upside of the business is the extreme stickiness. Over 99% of AT&T and Verizon's customers renew their plans, right? Canceling your cell phone is one of the last things you're going to do, even if you lose your job and you're struggling to make your payments on everything else. Your cell phone is one of the critical things that you're going to keep. That's vital for your life. That's what you need to take phone calls. If you're looking for a new job, go on the internet, answer emails. You need your cell phone plan regardless of what situation you're in. So that's the upside of the business. It's not going to grow very quickly, but they're also not going to lose very many customers that quickly. They're going to trade off customers between each other as market share goes up and down, but the overall size of the market is likely not to shrink, at least not in the near term, unless there's some disruptive technology, which is highly unlikely given the massive investment that's required to build out that size of a network. And so they've been good at generating cash flow from operations. 30.59% for AT&T in the most recent trailing 12 months compared to 28% for Verizon. So AT&T holding the slight advantage in this metric. I also wanted to take a look at the total employee count, and they've both done a good job in shrinking their employee base. 160,700 for AT&T, and that's down from over 250,000, and 117,000 for Verizon, and that's down from about 175,000. The reason I say this, they've been good at this, is because you've got those 99% re-upping customers, subscribers for the most part, and you're able to serve those subscribers with fewer employees. That makes the business more profitable. You've got the same number of customers, fewer and fewer employees, and so the profitability of each customer increases as you're able to serve them with fewer employees, and that's precisely what AT&T and Verizon have been able to do over the years. Another thing to note with AT&T and Verizon is they have massive long-term debt, $147 billion in long-term debt for Verizon, $138 billion in long-term debt for AT&T. So AT&T has slightly less debt than Verizon. I say slightly, $9.4 billion less debt. But when you're looking at $140 billion, $9 billion looks like a small number. But they've been borrowing a lot of money because of the massive capital investment that's required to build out a 5G network, and they're able to service this type of debt because they have strong cash flow and a strong recurring cash flow. 99%, remember, recurring cash flow. And so lenders are willing to lend money to AT&T and Verizon at relatively low interest rates because of the business model and because of how sticky those customers are. So again, slight advantage to AT&T here. Finally, I wanted to look at valuation, and it looks like AT&T is slightly cheaper than Verizon, trading at a forward price to earnings of 6.7 compared to Verizon trading at a forward price to earnings of 8.1. And what we've looked at so far, AT&T was slightly better than Verizon in a number of the metrics we looked at, right? The growth expectations for 2024 and 2025, the long-term debt, the cash flow from operations to sales. And so given that AT&T was slightly better than Verizon in a few of the metrics, I wouldn't want to pay a premium price for Verizon here. So if I'm deciding between these two, for 2024 as a dividend stock investment, I would pick AT&T. AT&T would be my choice for the better dividend stock to buy in 2024. But it wouldn't be a bad idea to take whatever investment you were trying to make and trying to choose between these two and just split it up in half and get half AT&T and half Verizon. That wouldn't be a bad choice either. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.